what is your outlook, or what are your expectations for 2010?
Well, when we look into 2010, there are a couple of things that we're focused on. One is the capital markets. We're seeing improvement in the capital markets. We've seen that in the public space with the companies accessing equity and debt. We are also looking at the fundamentals in real estate. We think 2010 will still be challenging in terms of fundamentals. When you look at the vacancy levels across portfolios and rental rate declines, we think that that's going to be challenging in 2010. But looking at the companies and the investments, we think that as you get into 2010, the outlook will improve as people start pricing in what's looking to be an improving economy.
Now, are there specific sectors that you expect to kind of perform better in the areas of fundamentals than some of the others?
Yeah, we're looking opportunistically at some of the more cyclical REIT property sectors. So if you think about industrial warehouses or hotels, those are two sectors with shorter lease terms and with more leverage to an improving economy.
And when you're looking at individual companies, has the criteria you use to judge them changed at all? So in essence, are you kind of looking at the REIT in a different way?
I would say generally our criteria remain the same. We're looking at the quality of the assets that's owned in the portfolio, and that would be the location of the assets as well as the quality of the build of the property. We're also looking at management and their strategy, how they're managing their balance sheet, as well as how they're managing operating their properties. But one of the things that we've been more focused on is obviously, because of the dislocation in the capital markets, is a focus on balance sheet, and an extension of that is looking at debt maturity schedules and really just access to capital.
Do you guys have a ideal level where you would like to see the companies that you invest in terms of leverage? There's been a lot of conversation about, obviously REITs have done a great job to delever, but is there a number that you have in mind?
It's hard to pick a magic number for the right level of leverage. We kind of think below 40% debt to total capital is a good starting point, because there you have some flexibility. If asset values decline further, you're still in a position where a REIT won't be over-levered.
Great. Gentlemen, thank you very much.
All right, thanks for having us.
For REIT.com, I'm Matthew Shea.